What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 6 years now, and I'm a part of the Chart Guys team, where I head up our futures room and, of course, our swing report, which is our weekly publication where we publish trade ideas and updates as well. In this video, let's go over how I'm planning on capturing the next move in Apple, a couple of different ways in which it might shake out and what I'm looking out for. And additionally, we'll go over some of the publicly traded ideas. These public videos are just some of the updates. So basically, they're busted trades or trades that have already played out. And I'm just doing continuation stuff on them. Yeah. And then additionally, in the end, I'm going to answer one of our members' questions. Who he just emailed a question regarding the session to session setup that you hear me talk a lot about, just to give you guys an idea of some of the feedback that we offer our subscribers. Okay, so without further ado, let's get into it. All right, so first things first, Apple, this was originally a trade looking for a higher low here after this move up. And if you are interested in how we capture the move, the last week's video has a little snippet for the idea that we ended up shaking out. So this was a busted idea, but I ended up not trading this live until this lower low didn't see follow through. And then on this move up, I took the trade on Monday the 6th. So again, we go into a detail in last week's video. I'll have a link to it at the end here. But basically, we bought this strong open. We had our stop under the low of the day. We took some profits as soon as we could to get risk free, and then I just stopped out the rest on Friday. Maybe it was too tight. I don't know. Either way, you're never going to know, right? This could be the end of the move or it could continue. And the idea is, if you look at XLK just continued on past this structure and then broke into all-time high. Whereas Apple, it still has this little guy right in the way, and that's pretty much it. So will Apple follow XLK? Who knows? But we'll be open-minded to both. And what I mean by that is, this bounce is very strong, so would not be surprising to see some daily retracement. But if we don't see daily retracement, if we get a strong open on Monday, yes, then we see higher highs. The idea is that if we break to a higher high over this high here, 190.96, then these buyers should be trying to come here and flip that structure. Again, look at what happened at XLK. So here's XLK's structure, right? This little guy sitting on top acting as resistance here, and then it was problematic on this move up, hold the back test of its point of control, and then it continues on. So will Apple do that? I have no idea. But what I do know is that Apple buyers are trying to get up here because they have to get up here. They have to clear this, eat up all of this supply here if they want to get into all-time high territory, which is what they want to do, right? So while we never know what will happen, we always have a very good idea of what the buyers and sellers are trying to get done. And so if we have a good idea of what the buyers and sellers are trying to get done, we can also assess how well they are doing it. It's no different than a sports team, right? If you're watching like American football, right? And one team, whatever, they're at the 50, they're at the 40, they're at the 30. We know where they're trying to get to. They're trying to get to the end zone, right? And how close they get to the end zone, right, lets us know how effective their offense is being, right? Or how effective the opponent's defense is being. Same, two sides of the same coin. Anyway, so here's the two ways that I'm looking at it, right? Either we're going to continue on Monday or in the next coming weeks or next week. And so that should look like an open that it's going to be strong relative to Friday's session. So if we get an open above the point of control, the buyers will be positioned very well to move value higher. And so if we open up here above this point of control and then we don't find acceptance below it, that can be a break of it, right? So something like this, we don't see acceptance under it. Okay, fine. If we make it all the way down here, right, and then we don't see follow through, okay, that's these buyers are playing defense, but they have to get over the point of control to really prove anything. So we can be a little bit more conservative here, wait to see what happens. If they can break over the point of control, we can look for a back test play. If you're very aggressive, you can buy that pass over the point of control, throw your stop under the low of the day. If the buyers are going to press on from there, they should crack the POC, get over the open, break these resistances, and try to come here, right? So that's one potentiality. Another one is that we continue to see value move lower. So if we value barely moved lower on Friday. In fact, the POC actually moved higher. But let's say the sellers do press the issue next week and they continue to move value lower, fine. I'm going to let value move lower for as many sessions as the sellers can take it. And as long as we're holding over 182.34, I'm going to be pretty confident in buying the first time that value has the opportunity to move higher by breaking the prior day's point of control, ideally starting over the prior day's point of control, ideally starting over the entirety of the prior day, because that would be a gap situation. And then we can use our gap rules, right? Where you just go with gaps that don't fill right away. If the gap does fill right away or does complete the fill, but value can't move to overlapping or lower, then the odds of a late day rally would greatly increase. So we'll just use those guidelines to look for a potential play if these buyers continue to press. Okay, if they don't and the sellers step in, fine, we'll let the sellers have their way at it, see how far they can get, ideally not back under here. But even if we're holding over 177.42, I still think I'm going to make that play. I'll look for that play. But if they were to move all the way down here, there would also be a good amount of space for a potential lower high to be set. So that's what I'm looking out for in Apple. Again, if you want to see how we captured this move, it's about 6 or 7% or so. If you want to see how we captured that move, just check out the last video. I'm going to include a link to that last video at the end of this video. All right, so let's move on then to, this is GDX with another busted trade. So, I mean, it did pay us because we got this move, but then we stopped out of the remaining position on this day. But this is still a potential inverse head and shoulders here, right? So here you have this left shoulder, this is a potentially a head, and then this is the potential right shoulder. So if that's going to shake out, then this structure down here should continue to hold price. It's pretty much what caught price here off this point of control. Additionally, gold is still very strong. It's just consolidating, backtesting this prior structure here. This is a very healthy looking chart. So if gold can continue to be strong and the market continue to be strong, well then there's good potential for GDX, the miners, to see strength as well. And if we do confirm this inverse head and shoulders, they should be trying to come all the way back up here. So I'm interested in taking another shot at this. I would like to see value move lower and then again take that same session to session setup. That's exactly what we did here, right? So we saw this lower low, didn't see follow through, and so on this day we bought the open because there was no incomplete gap fill. Remember what I was just talking about? An incomplete gap fill is always a failure on the seller's part, such that if you do not complete to fill the gap and then pass back over the open, it's a very high probability that a low of the day is set, especially if you pass back over the open and then make a new high of day. Then that should be the gap and go scenario. Does it have to be like that? No, right? You'll never know. But the idea is just that you have an edge in probabilities. So you take this kind of a bet over and over. It's like if you knew that dice was loaded, you had some dice that were loaded, right? And so you know that they more often than not are going to hit the 7, right? You know that. So you just always bet on that 7, right? Are you going to win every roll? No, right? But you're going to win more, you're going to win bigger, right? Than relative to when you lose. You see what I'm saying? So that's the idea, right? People, if you're focused on like trying to be right all the time, you're going to have a bad time, right? And so this game is about not about being right all the time, right? It's about being a graceful loser. That's really the key to trading. Anyway, yeah, because only a graceful loser is going to be willing to see their edge out, right? It's basically you have zero confidence in knowing what this outcome will be, but you have high confidence, absolute confidence that you know what the outcome will be over a very large sample size. See what I'm saying? That's the idea, right? So anyway, yeah, so we have space for a daily higher low to be set over 27.02. Anything over that's going to be good for a daily higher low. So I would like to see value move lower for a few sessions. And then again, same idea. As soon as there's an opportunity for value to move higher, then I will be interested in that. In fact, it's already moved down lower. So even though we didn't begin daily consolidation, if we did happen to just catch all of these sellers on the wrong side on Monday, it's very reasonable to expect at least a test of this. So we shall see. Let's see where it's at today. So 28.44. So let's say we opened up at 28.44, higher than 28.44, didn't move down to 28.44. Again, that's yesterday's point of control. We can look for a buy up to 28.82. Okay, that should be where these buyers will have problems, just like they had problems here and here and here. All right. Moving on to Oracle. So Oracle, this one was an idea. We got a long here. We got a sell here. We got an additional sell here. And now these buyers are knocking on the door of this key structure again. So Oracle, it's pretty much the same as Apple. It's very similar. It's very close to all-time highs. It's within the tech sector. But this structure is clearly the problematic area of supply right now. That's exactly where the seller stepped in here. And here on the way back up again, again, this high of the day is practically right at that value area low of this structure, as is the highs of these two sessions pretty much. I mean, especially this one, right at the point of control. If we zoom in, I wouldn't be surprised if we saw some more detail around the POC. And I would say that's pretty good detail, right? You failure, no acceptance above, oscillate around, no acceptance above, try to break up higher high, no acceptance above, you come right back down and try to test the value area low. You break the value area low, no follow through. POC is problematic. Break the value area low, no follow through. So they should be trying to get to the POC again. So the idea then is this is looking good for a potential daily bull flag, right? Because the RSI is not really that hot on the daily, and so this is another pretty good candidate, very similar to Apple. I kind of like this better, honestly, right? Because if we pop over this, they should be trying to come here, 118.52. So that's like, let's see, 2% relative to Apple. Apple is, I prefer the Oracle trade, actually. I prefer the Oracle trade. So I'll probably prioritize this now that I'm looking at these two charts, because if a pop over this high should get us there. They should, not, I shouldn't say that. They should be trying to get there. So the potential gain on that is likely going to be better, but we'll see. Yeah. And so, but if we do see further consolidation here, as long as these buyers are holding over this tiny little flag, they're doing just fine. And even if they lose that, if they can hold back test of this structure, they're also doing just fine. It's just that that would be a good amount of space then for a lower high to be set as well after. Okay, so that's pretty much, is that it? Oh yeah, we have Roku too. So Roku, unfortunately, we made a play here. It did pay us pittance, not much, and then it came back down and got caught up at this point of control here. You can see that clearly it's the point of control of this big area of supply here, right? Beefing, challenging or whatever this structure over here, right? Because look at all of this price action, pretty much completely dictated by the POC of that big structure and the POC of this little structure. And now that we have cleared the POC of the big structure, these buyers should be trying to come here, 97.021. So if you're even more aggressive, this is probably even more percent gains. They should be trying to come up here, but the RSI is a little bit hotter and Roku has a lot more supply to work with. So you have a lot more people who will be willing to sell into any strength. So, this one is a little bit riskier, but very reasonable as well to look for the same thing on Monday if you get a strong open above this day target here. Okay, so that again, that would be an open, ideally as high as over the point of control as possible, no follow through down to it, ideally no test of it, pass back over the open. You can buy that, pass over the open, throw your stop under here, and then look for that target up here. All right, that's it. And let me respond to couple questions from well, I don't know if he would want his name shared, but either way, this is one of the questions here, and it is let's see, yes, so the question is regarding the session to session setup, what's the ideal circumstances for it? And yeah, you want it to be ideally a gap, because think about it, right? You just want to rank these things from the most strongest to the most weakest. So the strongest open has to be a gap up open, right? The next strongest open would have to be an open that is above, that is above, like this guy, above the value area high. So in this situation, you open here, right? You move down through the value area high, through the point of control, but you fail to get to the value area low. The goal for the sellers must be to trade through this entire structure. So if they fail any of that and then pass back over these key levels, it's a very reasonable, although aggressive approach, but it's very reasonable because the risk is so low. If you buy this pass back over the point of control after they fail to get to the value area low, your risk is less than half a point, right? And your first target is right here, right? So your risk is less than half a point, and your target is almost a point, about a point. So it's a 2R multiple just to position for this. If you can get risk free on this move, and then you're very comfortable with this move up, right? You can take profits anywhere here, keep your stop under there. If you stop out, you stop out. You lose nothing. You gain a little bit, which is exactly what happened on our last Roku attempt. So then the nuances are, where do you open up and how does price respond to these levels? Because technically it can even break through this low, but then you just look at the next structure, right? Because if they break through this regular trading hours low here, right? That's the goal for these sellers. But But let's say they crack through this guy and then they don't see follow through to close this gap. That means the change from this gap is not being negated. If you pass back over the low, that's a pretty reasonable buy, even though it's aggressive. The idea is that the sellers just failed. So you're just always kind of assessing, okay, what are the buyers trying to get done? How well did they just do that? Okay, if they didn't do a good job, you just turn around and say, okay, what are the sellers doing now? Again, it's like American football, right? Like if one team gets stopped at like the 10-yard line, they got pretty darn close, right? And then let's say the other team can only make it to the 30-yard line, right? Okay, so now you have a good idea of what's happening. But then let's say that a star player on the stronger, the team that had the advantage becomes injured, right? Or whatever, loses his flow or whatever, his wife calls him and says, hey, I don't love you anymore. I love the opponent. I love your opponent's quarterback. I don't know. No, you know what? I love your opponent's kicker. Something that would have hurt the QB way more. Then maybe his head is no longer in the game, right? And then they squander their advantage, right? So you never know. You just have to always constantly assess, right? It's like that could be a big upset of a game or whatever. Anyway, so those are some of the nuances that I'm talking about regarding the session to session setup. Like it's not, you can just trade the most aggressive ones. Like if it does just only buy the pass back over the open, if there's an incomplete gap, there's a lot of traders who do just that, gap traders. So anyway, that's the nuance, right? You have to figure out, what you're comfortable with and to start sorting out, which setups you're okay with taking. I always recommend newer people just only take the best of the best setup. So that's the incomplete gap from the pass back over the open. That's the best one, especially if it's looking for a daily higher low to be set. Okay. Now the Apple one, for example, was not the most ideal situation, but it was quite good, right? Because you had this potential higher low here, and although this open on Monday the 6th wasn't a gap, although it wasn't a gap, where's the 6 here? Although it wasn't a gap, it's an open above the value area high, above the point of control, and this move does barely even touches the value area high. You see what I'm saying? So you don't have to be super black and white with it. Only take the best setup, especially if you're newer. Just get comfortable taking the best setup first, and then you'll start seeing how sometimes these levels will be violated. The point of control, will be violated, or even you'll get a weak open, but you won't get follow through down to the next key level, which should be the POC of 2 sessions prior, and then you get back above the POC of the session prior. That's obviously a notable failure for the sellers and then notable strength on the buyers. You see what I'm saying? So anyway, that's the nuance to it. And then the same gentleman had another question, which was, do you have rules when deciding which direction to be looking for swing trade setup? So yes, I always want to trade with the direction of value. Okay. So for example, you took a CVX pass back short on Thursday, which ended up being a chop and stop. Yeah, that is what I call it. If you chop up for profit and then you stop out the rest, it's like a nothing trade, whatever, no big deal. Looking back on it, I'm wondering if it even made sense to be looking bearish when the overall market had been so bullish. Okay, so that kind of thinking, that's a fine line there, right? Because we never want to be predictive, right? For all you know, the market could have turned around on a dime that day. You know what I'm saying? So we have to, it's something where you always want to assess, because you can have a very strong start to a day, a morning session that rips, and then something happens and then boom, we have a U-turn. Is it common? No. But is it possible? Yes. And as a trader, you must always think in probabilities. And so you have to always be open to anything happening, right? So just be mindful of that. My thinking on the CVX setup was that it was relatively weak, and with the oil weakness and the market being so extended, I was going to see if we got some daily consolidation in this product market to help the position. I would find it helpful to have some if-then rules to help guide which direction to be looking overall, but it may be more case-specific. It absolutely is case-specific. Like we were talking about, it's very nuanced. Don't worry about it. We are an educational resource, so blow up the mailbox all you like. But please be patient with me if it takes some time occasionally to get back to you. So for CVX, then I think you were talking about it on Friday. You were looking for a sell. So some things to be considerate of here in this CVX chart, right? If you're looking for a sell, is you've already seen a lot of weakness here, and you're at an area where there's been support before. So if you just zoom in, if you look out to the left here, you know that this guy is probably key, right? Because it's probably what made this low over here. So you would just draw your fixed range profile. And see how prices respond. So this definitely is key, right? So the closer that you get to this level, you know that there is demand here. Additionally, you have this support over here. So You put that all together, right? And you have support over here. You know there's been good demand here because the last time we were here, we made a new high, right? Well, we eventually made a new high. Not we, CVX eventually made a new high. And you already had this little initial lower high and lower low lag follow through. So looking for a sell on this day is kind of aggressive, not because, you know, we could have known that the overall market was going to be strong or that the overall market is strong. That's not really the case. This specific chart itself, you know, because we're approaching support and we just saw a lower low lag follow through, you have to you know, think that there's probably some buyers that are interested here, right? Additionally, this is an open that I think the open was way above, right? So this is not the ideal situation. If you wanted to look for a sell here, ideally we would have opened under the point of control. So that's pretty much it. Yeah, that's pretty much it. Like you just want to be considerate of, you know, the chart and then where the open is key relative to the prior session. Additionally, this, you know, you would have been looking for continuation. I prefer to look to try to get the first like lower high play, right? Like so ideally this day is when you would have tried it. Why? Because this was a gap down day. You had a gap down day, your open was here, and so you know that this is the most high confidence situation, right? Because what do these buyers have to do in order to negate this gap down? They have to get back over the prior day's regular trading hours low, right? Bare minimum. Okay. And so if you get an incomplete gap fill, roll back down under the open, you can sell that open, right? Your risk is next to nothing, almost always when you do this play, less than half a point. Your first target should be here. That's more than 1R, so you can take off half and be risk-free and then some. And then your next target should just be the value or probably just this price action low here, right? And so that it runs right to there. And that's a 2.3R multiple trade. Okay, so anyway, that's the idea. This context was not great for the sell. If you did hit that sell, it's not like the worst thing in the world, but it's just a bit aggressive. Okay, regarding if-then statements, it's not, I wouldn't perceive it like that. I don't really like to be super strict with it, right? Again, you want to think in probabilities. Don't get me wrong, it's good to think in if-then statements, but you also have to understand that there's just a ton of nuance to trading as well. So the idea is if you are looking for a potential daily lower high or higher low has been set, then we can look for the first time that value is going to move with that potential lower high or higher low. That's when you ideally will look for these plays. Okay, so that is it. Whoa, this was a doozy. It's 22 minutes long. If you've sat through all of this, then I appreciate you sharing some of your time and energy with me. I hope this was helpful, getting some, you know, a little peek into the kind of offerings that we do. The swing report comes out every single week. There's new ideas every week. We post updates, live updates to them whenever we take the trades. Even if we don't take the trades, I will also post updates for people who have a different trading style than myself, or Dan is on the team, Laura's on the team, Funk is on the team. So if you're interested, give us, you know, check us out. The links are in the description. And if you wouldn't mind hitting us with a like and a subscribe, I would appreciate that very much. And so that's all for me. Appreciate you guys, and I hope to see y'all soon. Farewell.